Hi, everyone. Sorry about the delay. We had a few technical difficulties, but we promise to still get you out of here on time. My name is Brenda Adimora. If we haven't had the pleasure of meeting, I am the Houston Young Lawyers Foundation's chair for the Board of Trustees. HYLF was created in 1992 in order to improve the quality and the availability of legal aid, health, human services, education services in the greater Houston area. For nonprofits that work to serve that community. And one goal of HYLF this year is to just collaborate with nonprofit organizations in the greater Houston area in order for us to all achieve our various missions. So we created this 4-part webinar series as part of through our Fellows Committee. And today is what will be one of 4 webinar series events geared towards helping nonprofits achieve their mission. Lori is our treasurer this year, and she will introduce our speakers today.
Good afternoon, everyone. As Brenda said, I am Lori Yount. I am the treasurer of the Houston Young Lawyers Foundation this year, and I am very pleased to introduce our 2 CPAs who will be guiding us through our questions about how to read a financial report. We have Dr. Saleha Khumawala and Keith Argueta, sorry. I'll give a brief introduction. Dr. Khumawala is a professor at in accounting and a founding director of the SHORE program at the University of Houston CT Bauer College of Business. She is a CPA and a chartered global management accountant. She teaches and does research in the field of government nonprofit accounting and social entrepreneurship, and again is the founding member of the SHORE program at U of H. She got her PhD in accounting from the University of North Carolina in Chapel Hill. Dr. Khumawala is also the co-author of Government and Nonprofit Accounting, Concepts and Practices, and is an active member in the American Accounting Association and served as the president of the Government and Nonprofit section in 2008. Dr. Khumawala is also an advisor to several nonprofit organizations in Houston. And Mr. Argueta, who is joining us, is of course also a CPA. He is a graduate of the CT Bauer College of Business at U of H. He is the partner auditor and nonprofit consultant at JAG Argueta, which serves as the accounting firm for the Houston Young Lawyers Foundation. Mr. Argueta started focusing on nonprofit accounting almost 10 years ago when he founded the Argueta CPA firm, which merged with JAG Associates in 2019. Mr. Argueta was also a sergeant and infantry rifleman in the U.S. Marine Corps Reserves. He is currently a board member of the nonprofit Advance in Houston as well. Welcome, Dr. Khumawala and Mr. Argueta.
Yeah.
And
thank you.
So happy to have you. We'll jump right in. Dr. Khumawala, can you tell us what types of financial documents should a nonprofit be keeping?
Yes, definitely. First, thank you for this opportunity. I'm really delighted to be here. And I hope I can, I teach the course for an entire semester. Yeah, I'm given less than 15 to 20 minutes to cram 15 weeks of material. So I'll try to do my best and then leave it all up to my co-presenter, Mr. Argueta. Can I share my PowerPoint slides?
Sure. Here we go. Okay, we can see them.
You can see them. Okay, okay. Let me see if I can. Okay, I don't know how but you all can see the slides, right?
Correct.
Okay, good. Then let me go.
Yeah, the slideshow should work.
Right. That's where I'm trying to and go from the beginning. Right. Okay. Are we all set?
Yes, you are.
Right. Okay, great. So thank you. Thank you for this opportunity. I'll go right through. Thanks for the very nice introduction. The world of nonprofits. So it's actually, I wanted to go and put the Rice University and Ben Taub out there and UFH, and never made it, but that's what that is for, the other blank space. So you can see the world of nonprofits includes colleges and universities and healthcare entities as well. So what's our learning objectives for today in the 15 minutes that I have? First, identify the authoritative standard setting bodies. So when we get to the financial statements, you need to know who is it that we are following, who is guiding us. And then the financial statements, the two major categories that, I mean, this is required by these standard setting bodies. This is the absolute the gap that you see in that first bullet point is generally accepted accounting principles. That's the gap we've got to follow. Then the cash flows are so important for nonprofits, and so on. So I have slides and I'll go very fast. So we have the standard setting bodies are the Governmental Accounting Standards Board and the Financial Accounting Standards Board. Most of the time we follow the FASB nonprofits because the GASB sets not-for-profit standards for governmental not-for-profits. So for example, University of Houston, we are a state university. We're a governmental, quasi-governmental not-for-profit entity. Ben Taub is part of the Harris County Hospital District. It is again a not-for-profit entity, but a governmental not-for-profit entity. So these governmental not-for-profit entities have to follow the GASB standards. But you and I primarily deal with private not-for-profits, the 501c3s, the March of Dimes, the American Red Cross, everything that you and I deal with, it's primarily all followed by the FASB Accounting Standards Board. But I did want you to have the other idea that you do have GASB out there. It's what's a not-for-profit is section 501c, and it does not have the power to levy taxes and so on. These, by the way, we will be sharing these PowerPoint slides with all of you. I will give it to Lori and Brenda and the team, and so they'll have it and they can send it out to you all. I'll just move fast on. So there is a wide variety of these entities. Some are like governments, which I just told you. Then some are comparable to business. So the hospitals, nursing homes, childcare centers, they're all comparable to business. And the first not-for-profit myth that I want to make sure that everybody is aware of is that not-for-profits is a tax-exempt status. That doesn't mean you have to be absolute zero in your bottom line. No, that is a myth. You have to be sustainable, and therefore your revenues have to exceed your expenses. And it is always good to be a positive, or a black bottom line rather than a red bottom line, please. So that myth is, not for profit, you can't make a profit. It's not about making a profit or not. It's about being in business. It's a business that you're running. And actually, it's a business that is harder than running a Walmart, because here you have two objectives in mind. One is you're serving others without getting anything in return. So you have to maintain that bottom line, and there's a social mission to it. And that's what I teach. The first day I teach, my first PowerPoint slide says, it is a tax-exempt status. It is not, it's a business at the end of the day that you're running, okay? And some nonprofits are hybrids, funding derived from both exchange and non-exchange transactions. Now, the University of Houston, for example, we do get, we're a state university, we do get some funding from the legislature as an educational institution, but at the same time, we charge fees and everything else that you can think of. So, so you can call, and therefore we have example as colleges and universities. Not-for-profit accounting now, in terms of financial statements, Lori's first question. So, accounting gives the nonprofit entity a key tool. Okay, so a fund accounting, as I call it, it's a key tool to run its business. I remember It's a business that you're running at the end of the day. It helps you plan your future because you need to have revenues, contributions for the, you have to make sure that you will be receiving contributions next year and the year after and so on to be able to carry out your programs and carry your mission. Show donors and regulators that you're spending and tracking the funds the way it should be. Okay, that is compliance is the key. Otherwise, you can lose the status. And the other co-presenter, Mr. Argueta, is going to go into all of that. I'm going to pass the next bullet, which is tax and regulatory compliance, because he'll be talking about it. Then you've got grants. A lot of people don't understand, but the federal government has 26 agencies, my friends, that give funding to not-for-profits. So you get a lot of grants. They get grants from governments, they get grants from foundations, and you've got to comply at the end of the day. So regulators are not just government regulators, but people who give you money regulate you as well. Okay, you have to be transparency and accountability is the key to getting future donations, because that's what builds trust. And trust is not the only thing, trust is everything. Okay, and the Accounting Standards Board emphasizes the superiority of accrual basis over cash basis. However, I founded a nonprofit, I run a nonprofit, I serve on some boards. Some very small nonprofits just follow the cash basis. Okay, so but the majority of the nonprofits, I mean, we are talking about, how you have the Fortune 500. We also have the top 100 nonprofits and so on and so forth. Everyone follows the accrual basis. Now, the financial statements, getting to Lori's first question, the financial statements of not-for-profit organizations. So the balance sheet, the A = L + A, we call it the statement of financial possession. And that equity, the net assets, belong to the entity. They do not belong to the board. Okay, they are not the residual claimants. A nonprofit does not have residual claimants. It's not like a business. After everybody's paid off, whatever is left goes to the owners. No, that's not what exists here. Then we do not call it a statement of income or statement of profit and loss. Also, it is called the statement of activities, or the other term for that is also statement of operations, but statement of activities. Okay, statement of functional expenses. These four statements are required. They are required by the current accounting standards, okay, by generally accepted accounting principles. And then, of course, the statement of cash flows, which is the key, because the financial position gives you a picture of what has happened in the past, my friends. The financial position, the balance sheet, is a snapshot as of a given point in time, only on that date. So when the fiscal year comes to an end, December 31st, 2020 or December 31st, 2021, it gives you what was the financial position of that entity, of that not-for-profit on that day only. And activities give you a picture of what happened in the past year. So these are all looking back. So a statement of activities for the past year will give you what happened over the year, but again, it's looking back. Financial position is as of a given point in time. Functional expenses are the key. They tell you exactly what happened by each function, and a lot of nonprofits will have that basically divided up by programs, by activity, and I have examples to show you. But the cash flow is the key, because at the statement of cash flows at the bottom will give you the net change in cash. And at the end of the day, cash is king. You need cash to be able to pay the employees. You cannot run a nonprofit on volunteers, my friends. It just doesn't work. Can you imagine if Walmart ran its entire business on volunteers? This is exactly the same thing. You're running a business, you need to have paid employees, so they are accountable, you're accountable. And to pay the employees and all of that, you need cash. And so it's the statement of cash flows that tells you exactly the amount that came in, the amount that went out, and what is the cash position of the entity at the end of the year, which will then be carried forward to the next year. Now, here is the thing. This is very, very critical. Every dime that comes into the nonprofit has, the way I tell the students this, has a string attached to it. And if there's no string attached to it, then you will have donors that will say this is unrestricted. In other words, they give the nonprofit, the board, the operating funds. But if you get donations that are restricted for a specific purpose or to be spent on a specific time, that is net assets with donor restrictions. And a nonprofit can only have two types of net assets: without donor restrictions and with donor restrictions. There are no ifs or buts about it, okay? And the restrictions are imposed by donors, okay? Now, endowments, a board of directors can have what we call a quasi-endowment, but those are board imposed that can be moved. But the restrictions imposed by donors cannot be changed. You have to comply with that. That's an absolute must. There are 5 totals on the statement of financial position, the balance sheet: assets, liabilities, and net assets. And the net assets have 2 categories: net assets without donor restrictions and net assets with donor restrictions. And the nature of these restrictions have to be shown on the face of the statement, on the face of the balance sheet. You can have it spelled out, or it has to be disclosed in the notes. And remember one thing, it's not just the 4 statements. The notes to the financial statements are an integral part of the financial statements. So financial statements may be on 4 or 5 pages at the most. Statement of activities will carry over on 2 pages. Functional expenses, 1 page. Cash flows is 1 page. So at the most, it has 4 statements, 5 pages, but you'll have 18 pages of footnotes, of notes to the financial statements, and they are an integral part. And so if you do not show these restrictions on the face of the statement, you've got to show it in the notes to the financial statements. This is, I know you can't say it, but this is March of Dimes. You can go on the website. Their financial statements are available. So even when you do get this PowerPoint and you say, oh, well, I can't strain my eyes. No, just open up go to Google, say March of Dimes 2020 financial statements, and you will get the PDF and you can pull it up and see this. And, but I circled the net assets, which were without donor restrictions and with donor restrictions. And then it gives you the total liabilities and net assets. But you see the total assets without donor restrictions. Actually, they have a deficit there. They spend more money, So, so they spend more money than than what they received, unrestricted. Okay, so that's basically the March of Dimes. Then something else that a gap requires is that the NFP liquidity is the key. If you're not liquid, you don't have liquid resources. That's why I said cash is the king. You cannot move forward. So what does the liquidity show? That does the NFP have sufficient financial assets to meet cash needs for general expenditures for the next fiscal year? This is what you need to do to evaluate a not-for-profit. And this availability is influenced by internal restrictions by the governing board and external restrictions by donors, laws, contracts, government restrictions. Whoever gives you funding, they impose those restrictions. I mean, basically tell you exactly how they want you to spend the money. That's the bottom line. And you've got to reconcile, that transparency. You have to have a reconciliation of these financial statements when the cash needed for the next 12 months. Here, this is just an example that I'm trying to show you. Financial assets at your end, donor imposed restriction, how much it was, for a particular purpose. I'll talk about a quasi-endowment fund shortly, and then liquidity reserves and so on. Okay. Statement of activities. It will show the revenues, expenses, gains and losses on investments. You're wondering, what are these gains and losses? Well, major nonprofits have funds that they invest. They don't keep all their cash in a cash. I mean, they'll either have CDs that will mature, financial instruments that will mature, and so on and so forth. And investments, and they go up and down, and you've got to show that on the statement of activities. Contributions are your support. Revenue, there's a difference between revenue and contributions. Contributions are what donors give you without you getting anything in return, without them getting anything in return. But membership fee is a revenue. So if you have a membership to the Houston Museum of Natural Science and you get that, well, that's revenue for them because they're giving you something in return. And that membership gives you discounts. It gives you a huge discount on summer camps for children. The camps just got over. Any tickets you want to buy, you get a discount. So revenue is when you're giving something and you're getting something in return. Contributions is just plain out, you and I donating money to March of Dimes, Red Cross, texting, after every disaster and so on, okay? And what does GAAP allow? It gives you a considerable flexibility. So generally accepted accounting principle, they give you full flexibility in representing the statement of activities, either in a single column or two columns. I personally, because I run a nonprofit, I'll be honest with you, I personally, now this is only personal, I'm telling you out of experience, and Keith can then later on, I like to show it in two columns. And the reason why I like to show it in two columns is because the expenses can only go out of the unrestricted column. Expenses can only go out of the unrestricted column, okay? And then you can go operating, non-operating, earned, unearned, and so on. Yeah. Statement of activities. This is March of Dimes. You see, without donor restrictions, with donor restrictions. Okay, and then you see right here, this is, oh, sorry, let me just go back. I can't. These expenses are all down here in this column without donor restrictions. You cannot spend a dime out of money that is restricted. A dime out of any money that is restricted. It all has to come out of unrestricted funds. That is why a lot of times it's good to have some unrestricted dollars. Otherwise, how are you going to operate? In order to when you do get donor or restricted funds, we're happy as a nonprofit. I'll take money in any form I get. Okay. But then at the end of the day, yes, this is towards my programs but then to achieve that, I need some unrestricted dollars. So either you have to have an endowment that gives you income to achieve that, or you've got to plan. That planning is the key. Revenues, membership dues, program service fees, sales of supplies and services, investment income, some grants. These are all examples of revenues, okay? Contributions. Contributions are non-reciprocal receipts of assets and services. My example that I just gave you. March of Dimes, Red Cross, and it can just go on and on and on. When the gentleman from Shriners is out there at Target, and we just put it in his bucket, the poor man is standing there, hoping somebody will give him something. Okay, it's all non-reciprocal. And exchange transactions are reciprocal receipts. You give up resources of commensurate value, and that's those are hybrid. So colleges and universities are hybrids, okay? They're giving you something in exchange, okay? And then only contributions can be categorized into the two categories of restrictiveness. Again, contributions, the support that you're getting. Donor restricted, without donor restrictions. Pledges. Pledges are promise you. It's not a legal binding thing. If they can't pay, you cannot go after them. You can just send reminders and reminders and reminders. And so you do have uncollectible pledges. Okay, you do have uncollectible pledges. The Museum of Fine Arts has a 14% uncollectible pledge. Okay, so that's just, I'm just giving you that as an example because I worked on that case. So yes, you cannot go, you can have pledges receivable. You can have pledges receivable, my friends. But then you also have to have uncollectible pledges. Okay. Yeah. Here is a consolidated statement of activities, operating revenues and gains, contributions, you see. Now this is from the American Red Cross. I use the American Red Cross as an example to show you, because the Red Cross has a lot of different categories. Contributions coming from corporates, foundations, individual giving, okay? Red Cross gets it from all major sources. Corporations give to the Red Cross. Foundations give to the Red Cross. United Way and other federated agencies support the Red Cross. They have contracts with federal government and they get it. They get it from legacies and bequests, out of estates as people pass. And then the services and materials and so on. So I use the Red Cross as an example to show the different categories of operating revenues and gains and contributions and other sources of revenue and so on. Okay, expenses, all, you see my all that I've capped, that they can only be reported out of the, unrestricted net assets. Okay, can't emphasize that enough. And then you have, and of course, if you're following the accrual base of accounting, you have got to record depreciation expense of all capital assets. And collections, that's museums. They have a collection of art and all of that. That doesn't depreciate, okay? And so those are assets of a museum, my friends, but they do not depreciate. So you don't depreciate art. So that's why I said except collections. And you have to use the accrual base of accounting. Now, the statement of functional expense, 4 statements, okay? Each expense is coded in 2 ways. You can go by program. So the different types of programs, that's management in general. Management in general is, salaries to employees, utilities, and all of that. And then the fundraising is also an expense. If you're paying a team, these fundraisers, if you're paying them a cut, then that has to be reported separately. But the normal 3 categories of expenses that nonprofits classify them as: program expense, management in general, fundraising. Okay, that's what you need to know. And then here is a statement of functional expense.
Dr. Khumawala, I know you're fitting like a whole semester.
Right. No, I have 2 more slides and then I'm moving. I have 2 more slides and I'm moving.
Okay.
Statement of functional expense. Yes. And you can see that. Okay. And then this has to be explained in notes. The joint expenses, and I'll tell you what I mean by joint. Have you know about Mothers Against Drunk Driving? Everybody knows that, and they send you a bunch of stuff in the mail. They say that's an appeal. That's educating people. Okay, that's a joint cost. Is it a mail? Is it fundraising? Is it education? It's both. Investment gains and losses. Okay, and then endowment. Believe me, hospitals, colleges, and universities, we couldn't survive without endowments. Okay, and here are all these categories. And here is a statement of cash flow. Sorry, I tried to enlarge it, but it wouldn't. And then the health. And then you have all these rating agencies, and Keith is going to talk about that. All of this has to be reported on a 990, and then the Charity Navigator and Better Business Bureau Wise Giving, they take all these numbers that you and I report, and then they report that on the, and then you go through and all of that, and then here is a summary. Thank you, Lori. Thank you, Keith. We started late. I've tried to do it within 20 minutes.
Oh, thank you very much, Dr. Khumawala. We really appreciate it. And we really appreciate having the ability to have these slides afterward as well. So, okay, so in the interest of time, I'm going to hand it over to Keith Argueta. Argueta, sorry, I keep adding an R in there. Could you please talk to us a little bit about the tax reporting responsibilities of nonprofits?
Sure. Let me share my screen here.
Sure, I think, can you share, Dr. Khumawala, I think yours is still up. I'm not sure if you can.
Oh, is that right?
Yeah.
Yes.
Okay. And Keith, is this yours?
Yes.
Okay.
Should be. Okay. Okay, can everyone hear me okay? And can everyone see my slide?
Yes.
Okay, excellent. So One of the questions that came up, and I'll start with this one just because it's very straightforward to answer. One of the questions was, at what point are outside auditors recommended? So I'll start off with that on my presentation. So introduction for audits of nonprofits. It's not a requirement in the state of Texas, just so that everyone's know in terms of legally and by state laws. And I'll cover that here in a second. So really quick, what are the audit requirements? What are the due dates? And I'll go over some very quick examples. So what are the audit requirements? If in the bylaws of their nonprofit organization, if it stipulates that an audit is required, then that would require you to have an audit, of course. State laws. So for example, in New York and California, it is required for certain nonprofits that are of certain size to have an annual audit, but not in Texas. Another requirement would be, say, for example, if you work with the United Way, or if you work with organizations or grantors or foundations that require you to have an audit as part of the money that they will provide you. So the United Way will give $200,000, $500,000 to smaller nonprofits, but conditionally they will say you have to have an annual audit by an outside CPA firm. And sometimes banks require to have an annual audit, either if you have a loan or a line of credit with them. So these are some common requirements to have an audit. The first two, the bylaws and state laws, obviously you guys are attorneys, so that's something that you guys would be very familiar with. All right, common due dates. So I've seen just a variety of due dates when it comes to bylaws. It could be 3 months from your year end. It can be 5 months from a year end and whatnot. But I typically see common due dates when it comes with banks. For 6 months, the bank will say you have 180 days to have your annual audit submitted to us. And that's part of their financing agreement, whether a loan or a line of credit. Sometimes donors will require you to, like I said, to have an audit within 6 months also as well. I've seen 9-month due dates from your year end with a lot of grants that are federal and state. I've also seen where I say various by bylaws, but also a lot of nonprofits that are going out for grant applications will sometimes say, I've got this grant application due in December. We've got to get this audit submitted as part of our grant application. So sometimes you'll see various due dates there. So I'll quickly show some examples of what an audit report looks like. And what to look for. As a board member, you would want to know what the opinion is from the outside auditors, and 2, are there any findings? So I'll quickly just share my screen here. Can everyone see? This is the Houston Zoo. Can everyone see this?
Yes.
Okay, so if you just go to the Houston Zoo, the the Houston Symphony, you name it, any nonprofit large in the Houston area, you'll typically just scroll down. There's an About Us section. You scroll down, here are all the board of directors. I imagine a lot of these are probably attorneys also as well. You scroll down, here's a section that shows the audit. Here's a 2020 audit report. Click on that and you scroll down. Here's a table of contents. Here's the audit firm. Here's their audit opinion right here, the audit report. And you just want to look down here that says what the opinion is. And it says here that the financial statements are fairly stated in all material respects. That means it's a clean opinion. It's a standard opinion. That means there weren't anything materially misrepresented in the financial statements for this year. So that's what you want to look for. If there is any opinion that is modified, it was stipulated in here what the reason was for that. Also, as part of an audit, usually the auditors will issue a report that says these are our findings also as well. So as board members, you want to look for what the opinion from the auditor is, and also if there's any findings. In a normal audit, you'll see here are the financial statements that Dr. K covered. Here's your statement of financial position, aka your balance sheet, assets and liabilities, and net assets. Here is our statement of activities, aka our P&L, revenues and expenses. So you'll have your financial statements, and then you'll have all the remaining footnotes in here. And I won't cover that, but it's essentially just going into more detail of the audit report. So that's a quick down and dirty of what to look for in an audit. Again, if it's required, what are the requirements for the nonprofit to have an audit? We covered that. And then also, if you are going to have an audit, what are you really looking for? So I hope that answered the questions that we were looking for when it comes to an audit.
Yes, it does.
Here's an
That's very
introduction to the form. I'm sorry.
Yes, it does. It was very helpful.
Okay.
Please
Okay.
continue.
And introduction to the Form 990. Again, this is what I like to present to our staff, or our first year associates, second year associates. I practice a lot with nonprofits in 990. So this is our tax return, and it's our information return. So I'll cover that. And I won't go into a lot of details, but what are the basic forms? You're going to have a 990N, which is essentially a one-page 990 that says we made then less than $50,000. Okay, so that's that. If you're an organization that receives less than $50,000, it's a one-page do-it-yourself. Go to the IRS website. If you're an organization that receives under $200,000 and you have less than $500,000 in assets, you can file what's called the Form 990EZ. That's a 4-pager 990. And the next level is anything above $200,000 in gross receipts. An organization that has more than $500,000 in net assets will require to file a Form 990, and that one is the full form, 12 pages long. If an organization receives UBIT, is unrelated business income, some nonprofits, larger nonprofits, they might have for-profit activities, might be required to file a 990T and pay income tax on that. So that's just some kind of language around that in the 990 and a different Form 990 types. When are the 990s due? They're due on the 15th day of the 5th month. So if you're a calendar year nonprofit, your tax return is due May 15th. If you're a June 30th nonprofit, where your year ends on June 30th, your tax return is due November 15th. So nonprofits have different calendar years or different physical years, and that will determine when your tax return is due, your 990 is due. So I'll quickly just show some examples of what a 990 looks like. And I won't go into a lot of detail with the schedules. So I just showed, here's the zoo again. Here's the IRS Form 990. You just click on that. And here's what the long Form 990 looks like. Let me just backtrack real quick. Here's a 990EZ. Like I said, it's super simple. It's easy to me, of course. It's not as complicated. It's 4 pages. You'll cover the 990 here on the 990EZ. Here's the first page showing your revenue and expenses, right? Essentially your P&L activity. Page 2, you'll have your balance sheet, summarized balance sheet. And then everything after that, you describe your programs. What are your organization? What are your missions? Here's your list of officers here as well. And then the rest is just questionnaire and disclosures. Each questionnaire disclosure might generate another schedule attachment, and I'll go over that quickly with the example of the Houston Zoo 990. And then that completes the 990EZ. Like I said, it's 4 pages, very summarized information. And so that's an example of the 990EZ. The 990N I covered was also a 1-pager, very straightforward. In the interest of time, I'll just go over an example of the 990. I feel like for me, as practicing with my clients or practicing with our staff here at my firm, I like to just go over by getting some, hands in, roll your sleeves up examples. So here's a Houston Zoo 990. Again, they're a large organization. They generated about $54 million last year in income. So they were obviously required to file the long Form 990. So here's the long Form 990. Again, here is a summary page. This was a little bit longer. and your signature page. This is just the first page that I like to look at. It's give you some summarized information. How large is their board? They have 37 voting members on their board. They have 551 employees. And again, here's their total revenues, $54 million. They had expenses of $45 million last year. And so they netted a profit of $9 million. Again, nonprofits can operate in the black and have a profit. They just cannot distribute those earnings. They retain them in the organization. So page 2, just high level, what the summary of their various programs of the Houston Zoo. You'll see a lot of reference to Schedule O. Schedule O is a supplemental schedule that gives additional information, where in the tax return or in the 990, there's not enough room to give a full description of the mission. So you can attach things to what's called a Schedule O, and we'll go an example of that. Again, there's about 75 questions on the long form 990. I won't cover all those, but if there's a yes, it typically requires an additional schedule. So for example, let's look at question number 10 that says, did the organization have donor restricted endowments? If you click yes, it says complete Schedule D. Another question, for example, nonprofits have fundraising activities. So was there more than $15,000 in when you hired a professional fundraising? If you click yes, attach Schedule G. Did you raise more than $15,000 in your gala or your speaker series, your luncheon? If you click yes, again, Schedule G. So you'll see that this long form 990, the more yeses you check, the more complicated your tax return or your information is going to be. Again, the first 8 pages are just disclosures. Here's your entire board. Here's your again, this is all public information, so you can go and download this as an example, and you'll see who are the directors, who are the key employees, what their earnings are, what their W-2 income shows. Here also, also you list the board if any of the board members are compensated or not compensated. Again, so you have your high level directors and executives and officer positions, and then also your board members that are listed on here. Independent contractors that you paid out more than $100,000, so they have independent contractors here on this section. Okay, so why the 990 long form? It's a more expanded tax return. Here's your statement of revenue in more detail. Here's your statement of expenses in more detail. Here's a 2-year presentation of your balance sheet. Okay, and then here's essentially what your total revenue, total expenses were, and what you profited for the end of the year. So that's the long form 990. Again, it's 12 pages. This long form 990, again, will generate more schedules, like I said. So what are some common schedules? I'll cover these common schedules: A, B, D, and G, and O. So like I said, in the interest of time, I'll just quickly breeze through those. A Schedule A just shows that you are a public charity, meaning you're not a foundation, essentially. You receive money from the general public, and and there's a calculation that goes behind that. And so you'll see that in your Schedule A. This is a very common schedule. Schedule B is also a very common schedule. If you have a donor that contributes, the general rule is if you have anyone that donates more than $5,000, you have to put them on your Schedule B. On here, you'll see that there's 12 pages of this Schedule B. Again, if any donor or grantor contributes more than $5,000, you will have to disclose that also on your Schedule B. That's the common rule. Let's see. Schedule D. Schedule D is just a supplemental financial statement. If you have a building, if you have fixed assets, so a very common one, if you own equipment, fixed assets, that's a common disclosure. Here's your endowment disclosures. Again, that's Schedule D. Let's see, scrolling down, Schedule F, I'll skip these. Schedule G, I said, was another common one. Schedule G, so if there's fundraising activities, If you hire a fundraising professional, that's a common reason why you'll have to file a Schedule G. And so here's a Houston Zoo ball. So if you're, like I said, if you have a luncheon, you have a gala, you have a silent auction, whatever it may be, if you have a special event that helps generate fundraising dollars, you have to disclose that on your Schedule G if you generate more than $15,000. And that's usually, so on here, it's a high-level summary of how the Houston Zoo ball did. So they raised about $1 million in gross receipts. So that's your Schedule G. I won't cover these schedules. These are not as common with smaller nonprofits. And here's your Schedule O. Like I said, it's a supplemental information. If in other parts of the 990 you're unable to have enough room to disclose or put into certain language, this information, that's where your Schedule O is for. So I can answer some questions. I think one of the other questions was, what are the tax reporting responsibilities in a nonprofit? That's the 990 form. Depending on how small or large your nonprofit is, will determine which 990 form you fill out. Another question was, what is the 990? I hope that covered what the 990 was. And I think those were the main questions around the 990. So I'll stop my sharing. I think there's a question.
And Nadia, is there a question in there or?
Yes, there was one question from the audience asking what type of information should a nonprofit submit to their respective CPA?
Sure. With a lot of smaller nonprofits in the Houston area, access to your accounting records, right? Like Dr. K mentioned, what's your statement of activities? That's your P&L. What's your statement of financial position? Your balance sheet. So a lot of these common accounting softwares like your QuickBooks, you can typically just generate financial statements from there, and you'll want to give that to your CPA. And then your CPA will have questions about, how did your fundraising activity happen this year? Were there anything, again, who are your top donors and contributors? And that a lot of information comes from your accounting software and program.
And do you have any recommendations? What is, I guess, software that are most helpful for nonprofits? Yeah.
The most common one I see is QuickBooks. Like I mentioned, it's they'll have a discounted version for nonprofits a lot of times. A lot of nonprofits that I work with, 9 out of 10 times they're using the QuickBooks.
And I also had a question about when you're looking at a 990, either as a board member, potential board member, or potential donor, what are the key sections you look to evaluate that nonprofit?
Well, for me as an accountant, obviously I'm looking at was it profitable? Like Dr. K mentioned, as a nonprofit, you still have to generate enough income, enough gross receipts to cover your expenses. So that's, just like running on a normal business, you want to look at what's the profitability. You want to look at that. And then you want to look at what your assets and liabilities are. Obviously, if you have more liabilities than assets, then you're operating in a deficit, essentially is what that means. And then, with the 990, just ensuring that the disclosure information on board members, the board members that are on there, and then also who are, your executives or your high paid employees to ensure that that's disclosed on the 990.
And Dr. K, was there something you wanted to add about what to look for, as a potential donor or board member in financial statements for a nonprofit?
Right. So program expenses, that's donors look at program expenses versus, there's a second myth that overhead has to be very, very low. No, you cannot have overhead low, otherwise a nonprofit cannot function. But a lot of donors trying to say, oh, well, they have so much overhead. No, but the overhead is a sustainability of the nonprofit in terms of operations, besides cash and besides liquid resources. But you need the overhead to keep going. So, Keith covered everything. Very, very good. Super. So, but you need the financial statements in order to put the numbers on the 990. So the financial statements are the key.
Yeah.
So that reporting has to be done. And you have to have those financial statements, or your CPA will have to prepare your financial statements and then do the 990, you know, or so it depends upon what you give to the CPA, depending on to what extent you want to, you know, use their services. But there is a QuickBook not-for-profit version.
Mm-hmm.
You see, that's the key. Not just regular QuickBooks. There's a QuickBooks not-for-profit version that the nonprofits need to use.
Yep, that's a good point.
Right, and you get that for not-for-profits. It's very inexpensive.
Yep.
Good to know. Anietie, were there any other questions?
No, there weren't any additional audience questions, so.
Right. And then, so I may just add, so the program expense and all of that, these are the numbers that the Charity Navigator, the Better Business Bureau, and all these watchdog agencies or monitoring agencies is a nicer word to say. They look at those numbers and they come up with these ratios, and that's how you come up with 3 stars and 4 stars, and then nonprofits put that on their website to give confidence to the donors.
Sure.
Would you recommend going directly to those financial documents to take a look for yourself?
Yes, yes, but sadly, I mean, not sadly in the sense, but there are 2 reasons. Not everybody has the time. You know, so a lot of, and that's the first thing. Even people that have the knowledge don't have the time, and then not everybody understands the numbers, and to be able to make sense of the numbers. You see.
Mm-hmm. Okay. Well, we are just 2 minutes over time. Was there anything, Dr. K or Keith, you would like to add?
No, thank you for the opportunity. And then, you know, I will send you all my slides later on this afternoon after I'm back from my office, my visit.
Works.
Right, and then you're welcome to share those.
We will do that. And to all the attendees, this has been recorded, and we will post this to the Houston Young Lawyers Association YouTube channel. This is just the first of at least 4 of these types of webinars to give more education about nonprofits. We have one upcoming in November regarding nonprofit governance, but we are also open to hearing from you for topics if you would like to have more of these webinars and regarding nonprofits, and any topics you have that you would like to hear about. You know, you can email Lucy Kane at hyla.org, or I think you have the hyla.treasurer@gmail.com address as well. So feel free to reach out with anything you would like to hear from us for.
Right. I hope the participants found this useful. At least my poor kid did an excellent job.
No, both of you very informative, especially with the time constraints. And I learned a lot. I'm sure our participants did as well. So thank you so much for taking the time.
Thank you.
Okay.
Everyone.
Thank you.
Thank you.